Welcome to another episode of this mentorship, and again we will start out by looking at the economic calendar. And first of all, we can see that the majority of the high impact news events are at the end of the week, right? So therefore we will also put our focus on Wednesday to Friday, right? We have no news on Monday and Tuesday. As always, we will skip Monday this week. Also, we had a really large expansion on Friday, so this is even more a reason for skipping the Monday, right? And we can look for trades on Tuesday, but again, we want to put our main focus on Wednesday to Friday, right? Where we have Powell speaking during the New York session at 10 a.m. And then on Thursday we have again unemployment claims at 8:30 New York time. And then we have on Friday as well some Euro news, and then again at the end of the New York session we have PMI, right? So now if we take a look at the weekly candle of last week, we can see that we now finally got some displacement out of this range after we had two consolidation profiles, weekly profiles here, right? We now got a really strong bullish up close, and you can see we have also closed above this bearish weekly fair value gap, right? So we have the first weekly inversion level here, and we also almost closed above this fair value gap here, right? And now you can see we're also trading in quite a premium of this range, right? We have the swing low, the swing high, and we are now trading in a premium here, right? If we then go down to the daily time frame, right, we can see here the Friday close, or actually this is the Thursday close, but there's a Friday close, which was a consolidation profile, as we have talked about in the previous episode, right? And as you can see, here's the weekly fair value gap, and we also have a daily fair value gap right here. So we mark that out as well. We have a daily inversion level here, and we also have a bullish fair value gap on the buy side of this curve here, right? So again, we have here PD array alignment, right? We have the inversion level, and we also have this bullish fair value gap here. And if we take a look, we also have bearish order block right here, where we have traded into on Friday. So we can expect some pullback here into this fair value gap. And we also have then, once we get a bullish confirmation out of this, we can then aim for this swing high as our next drawn liquidity, right? So we now have marked out all of our daily and weekly PD arrays, right? And now we can go down to the lower time frames again, and we can now wait and see what Monday's price action is doing, right? So again, we are expecting either a consolidation profile or a retracement profile against the daily order flow. So in this case, we have a bullish daily order flow, so we probably will see a consolidation or a retracement down into this fair value gap, right? And also, if we take the fib from the swing low, which initiated this impulsive move to the upside, right? Swing low to swing high, we can see that the discount level, right here, is aligning with the middle of this daily fair value gap, and also the low of this daily inversion fair value gap, right? So again, we have PD array alignment here, and we have a high probability POI here, and we also have this short-term low as counterparty liquidity, which could act as a potential turtle soup here into this low, and then we see continuation to the upside into Friday's highs, and then the swing high I've marked out here as well, right? So we let Monday range play out, right? There we go, we trade into the daily fair value gap, and as you can see, we have a really tight range, 15 pip London range, 12 pip New York range. Those are not the trading conditions you want to engage in. You want to have expanding price action where you can get really one-sided clean order flow, right? And you want to avoid conditions like those here. So now we have the daily close right here. We check again the daily chart, and what you can see, we had a retracement daily profile into this bullish fair value gap here, right? And now again for Tuesday, we know we have no high impact news events, so we will probably see again not really much volatility. So we will take a look if we can find a trade setup, right? Maybe we can already get some longs here. So we wait again for Asia to play out, and then we will monitor the London session, right? So we have Asia here, we have Monday's low here, Asia lows here. So again, we don't want to long here, we want to wait until we trade below the Asia lows and the Monday lows, right? So we mark Monday's lows out here. Again for Tuesday or channel the entire week, if we are bullish, we want to buy below Monday lows, right, into a higher time frame PD array. So we have London open here, and we are now coming down here. Let's see if we can trade below here to play the London Open manipulation profile, right? So we did not get any manipulation below, so nothing interesting for us. We want to see a manipulation below New York midnight opening price, right, which is here, and ideally also below the Monday lows and Asia lows, right? So we have now taken out the Asia highs, or we have not taken them out here, we have actually equal highs now. So we have another short-term draw on liquidity here, and we now want to see what the New York session brings, right? So in this case, we don't play the New York continuation. Why? Because for New York continuation, we want to see London making the low of the day. In this case, Asia made the low of the day. So the New York continuation is not the correct profile for here. But we can play a New York reversal here. I told you the New York reversal profile is my least favorite profile out of the 4 profiles we have. Because it tends to be really choppy, but yeah, today would be a typical New York reversal profile day, right? We have London lows, Asia lows, Monday lows, so we have lots of sell side liquidity resting here, and we also have quite a retracement move here. If you look on the H1, we have an immediate rebalance here, and we close below. So we've disrespected this bullish order flow here, and now are trading in this propulsion block here, right? And go back to the lower time frames, and we will see what the New York session has to offer, right? So New York open here, right? And we take the lunch lows here, but again, we don't want to long here, so we might want to short here. If we get above those lunch highs and then get displacement, we can look maybe for a short scalp, aiming for those lows here and the Monday lows, right? So this is a counter trend trade on the daily, right? We have bullish daily order flow, so this is not a high probability trade, but it's still a setup we could take. But again, a high probability trade is always according to the daily order flow, right? So we are now trading above the lunch highs, right? And we also have this up close candle here, right? We have a bearish order flow on the M5, and we've taken the lunch highs here, and we now also see displacement here, right? We've closed below this M5 fair value gap here, and we also have a propulsion block right here, right? this is an order block because we have taken liquidity, broken structure, so we have an order block here. And we have, so let's make this in blue again, and we have another order block inside, so again we have two order blocks stacked on each other, so this one is a propulsion block, right? And as soon as we close below this one as well, we have confirmed a shift in order flow. So ideally we also leave behind now another fair value gap here, so then this will act as a breakaway gap. And you can see we now have this placed lower here and also close below this order block here, so we have a breaker here now. So we could again either market short here, or we could place a limit at the low of the breaker and then put our stops above the highs, right? So it's a 11.8 stop, and we could aim for our first major liquidity pool would be Monday's low, and in this case you can see you would get a 1.34 R trade, so again only 15 pips away. So this is not a setup I would take because it's not worth risking our equity for a 1.3 R trade, right? And it's also against the daily order flow, so this is not the best setup, and we are better off to skip, right? We could also say, okay, we will aim for lower, right? Here we would have a 2R trade, but again, it's below our Monday low, and if we reverse here, we would get stopped out. So we will stay on the sidelines and see what we get. So we would have gotten a fill here, and we trade now below Monday's lows. So in this case, we would now have gotten stopped at break even if we would have taken it and then said, okay, if we take below, trade below and aim for this, as soon as we trade below, I will move my stops to break even, and then if we go down here, it's fine. If not, we get stopped. So in this case, we would have gotten stopped at break even here, right? And then we now get this set off during London close, and we are now also trading in the inversion daily fair value gap, right? And now we are basically done for the day again. So we have, as mentioned, we want to put our main focus on the second half of the week, right, from Wednesday tomorrow until Friday. And we are now also trading at our higher time frame level, and we're also about to hit the discount of this range here, right? And we also have still the Friday highs and the equal highs here, and obviously our higher time frame draw, which is right above the 1.1 levels as our main target for the week, right? So again, we go and wait for Asia session to start, and then we want to wait for London again, right? And again, we go on the daily first, take a look at the daily chart, and as you can see now, we had now 3 consolidation or retracement candles, right? We are now trading at our high time frame level, which is the inversion daily fair value gap and the middle of this daily bullish fair value gap, right? So we can now expect some upside here, aiming for this high here first, the Friday highs, and then eventually also for those highs here, right? Again, we apply the 3 daily candle rule, kinda. We always take a look at the last 3 daily candles to determine the next likely profile. We had here 3 expansion candles, so we expected some consolidation or retracement. Now we had 3 retracement and consolidation candles, so now we expect an expansion move here, and the bias is bullish because we have a bullish order flow. We are in a market maker buy model here, and we expect those highs to be next, right? So as we can see, we also have taking out the Monday lows here, trade into a level here. At this point, we might take out the previous day's lows again, but we don't have to. We can also just trade below the Asian lows here and then go higher, because we kind of have a balanced price range here, right? If you ignore those wicks here, right? That's a balanced price range itself. We then have another balanced price range here, right? So this would be another balanced price range. And now we want to see the profile of the Asian session, right? We want to see a consolidation profile, and then we want to see a manipulation of the Asian lows, right? So with Asia here, and you can see we had a consolidation profile for Asia. So now again, we can apply our session profile, which would be in this case the London open manipulation below the Asian lows, below the New York opening price. And we can then play the continuation after we have seen the manipulation, right? And also, what could be a higher time frame narrative here, right? Of course, we have the daily market maker buy model here, right? But we also have a lower time frame market maker buy model here, right? We have the original consolidation, and then we have reaccumulation, and then we have here the smart money reversal here, right? So, and now we want to see the buy side to form here, and here we have the sell side of the curve, right? So we combine the higher time frame market maker model with a lower time frame market maker buy model inside, and we now apply this with the session profile, which is in this case the London open manipulation, right? And we also have a short-term low here and all of those fair value gaps here on the M15, right? So we mark those out, and we also have the Asian lows here. And there we go, we have the London open manipulation, and now we want to wait and see if we can get a shift in order flow again on the lower time frames. So we go down to the M5. So we are trading lower one more time. Preferably we take out those lows again, but again we check the DXY to get a lower time frame intermarket confirmation, maybe, right? Maybe we will see some SMT. So we add again the DXY here to the chart. So I now have added the DXY chart here. This time I used the candles because somehow the lines are bugging and not showing here, so I used the candles this time. But it's the same principle, right? So we compare the highs and lows with here. And we can see now DXY making a higher high here, right? But Euro still has not done a lower low here, right? So DXY made a higher high and Euro failed to make the lower low here, right? And now we can also see that we have a shift in order flow here, right? We have traded above this bullish order block here, a bearish order block here, of course, closed above, and we have this placement to the upside, right? So we have SMT, and we also trading below the New York opening price, right, which is this right here. And we're also trading below the short-term low, the Asia lows, the New York opening price, right? And inside this balanced price range here, right, you can see we trade right into the middle, and we've got a shift in order flow, right? So we have lots of confluence here that this is the low of the day, or at least we can get a bullish reaction here, right? So we could along here, right, we can say, okay, I will put a limit right here at the top of this last down close candle, and then I put my stops below the London lows again, right? And we will aim for the Friday highs first, right? Which would be a 3.6R, and then we can leave some runners for those highs here, right? And again, we have news, or we have Powell speaking at 10 AM, so we can expect majority of volatility of the day to happen after the New York session has been closed, right? But again, we can take our first shot here and try to get into a swing trade here, right? So there we would have gotten our fill now, and we're about to head into the London lunch hours, right? So now we have New York, right? We want to play the continuation. We still have, if we go on the H1, you can see that we have a mitigation block here, right? So all of this is a mitigation block. And we also have an order block right here, which is those two, or are those two down close candles, right? Those are our higher time frame PD arrays. And we go down to the M5 again. And we will see if we can get, you can see we are now trading in the order block, right? We don't want to see it close below. We keep our stops still here, right? Because we don't have a new invalidation level yet. That's why we leave our stops here, right? So you can see we almost got stopped out here, but again, we only want to take a look at the candle bodies, right, where they're closing, and you can see on the M5 we are still closing inside, and also on the H1 we are still, as you can see, we are respecting those breakup, the mitigation block and the order block, right? So we wait for Powell to speak, right, and then we will take a look what we get, right? So Powell is speaking here, and you can see that we now get displacement out of this range here, and we are now shooting up, and we are about to trade into those equal highs here, right? And we get some consolidation here. Again, we now don't want to long here anymore because we are already expanding here, and on the other side we also don't want to see retracement here again. Why? Because we're at this range here, we left the range, so if we get back into the range here, this would not be a good sign, and then we would probably go lower again, because then we would have an AMD here, right? We have a range manipulation and then distribution. But again, our bias is higher, and we also have a strong liquidity to the upside. And now we are also trading again in this daily order block here, right? The bearish order block. So let's see if price is able to push now through this order block here as well, right? And there we go. We now would have hit our main TP here, right? We could now take the majority off and then leave some partials aiming for the high here, right? Which is our weekly objective. So we go to the M15 again, because we are about to close the daily candle here, and we now want to take a look at the daily candle. And as you can see, we have now traded into that swing high, and we've also closed above this order block here, right? So now we have a new inversion level. We have a mitigation block, right? We've closed above this up close candle. So now you want to see price using this as support here, right? The upper half to then take out the buy side here, right? So we wait again for the London session, and we want to see what. So we now wait again for the London session to start, right? We can see the Asian range here. We see we had a consolidation profile, and we also have this short-term low here, right? We have the Asian lows here, and if you go on the H1, we also have unfair value gap right here. So we have PT area here, and it's also aligning with the upper half of this mitigation block, right? We also have a potential another fair value gap here, right? But ideally we use the first one, right? We don't disrespect this one. So ideally we already go higher from this fair value gap here, right? So we now wait for London Open to start, and hopefully we can get again the London manipulation, right? And we can play an AMD here. We have a range. We want to see now the manipulation, and then we want to see the distribution into those highs here, right? This would be now the narrative for today, right? So again, the protocol, we have to determine the trading conditions. We said we want to focus on the second half of the week. We have the bias also clear. We have now a narrative and a higher time frame PUI. So the first 3 steps of the protocol are done. So now again, we want to wait for the lower time frame shift and order flow combined with the session profile, right? So London Open is here, and we have traded now slightly below the flow, and now we have tagged the fair value gap and mitigated a bit more, and also have taken out this short-term low here, right? And now we want to see if we can get a shift in order flow here. A shift in order flow in this case would be a close above those up close candles here, right? If we get a close above, we want to use those as a mitigation block, and then to see higher prices, right? So you can see we now have almost closed above, so it's looking pretty promising for now. And you can see now we have closed above, and at this point we also have this placement, right? We have this fair value gap right here and the breaker block, right? So we have 2 PT areas in the lower time frames aligning again, fair value gap, breaker block, right? So you could put a limit at the fair value gap, stops below the low, and then we aim for the daily swing high, right? Which would be another 3.4 R trade. So we get a fill here, right? And you can see we expand higher from here, we don't close inside, which is a good sign for now. And we dig in one more time, but again, we don't close inside. And then we finally see the expansion here, right? And we now want to aim for those highs here, right? You can see that the price action delivery is not the cleanest, right? It's a lot of back and forth. But again, we keep our stops below the strong low here, as we don't have formed a new invalidation level, so we don't want to move our stops to break even too early, because then you would only trade your emotions, and you don't want to trade your emotions, you want to trade the charts, right? In this case, there's no reason for putting our stops higher, right? We leave our stops here and wait for a new invalidation level to be formed, or either our TP to be hit, right? So again, we have now London lunch hours, right? And we have now hit the TP, right? And we also would have now taken off the remaining partials of this long here, right? So we have now 2 longs, we have hit the weekly target, right? And if we take a look, we are also trading almost at 1/3 of the average weekly range, right? So again, for New York, we don't want to trade New York, because the New York continuation setup only applies if we have still a valid draw on liquidity, right? In this case, we have taken out the draw on liquidity, so we don't have a draw on liquidity anymore, so therefore we also don't want to trade the New York continuation, right? So go on higher time frames and just observe what New York price action is going to do, right? And we can see that we get a retracement after taking out the buy side. And we are now seeing a sell-off here, right? And you can see that we now get a retracement here after taking out the buy side, and we are also now trading below the mitigation block again. So you could say we have here a short-term shift in order flow to bearishness, because we have taken the buy side, then broken the market structure here, right? We're breaking below the swing low, and we also have disrespected the inversion levels. So you could say that we are now maybe in a bearish order flow again, and we have possibly made the high of the week here. So for Friday, we don't have a clear bias, right? We are still obviously bullish on the daily, but we have taken out the daily buy side levels, which were our main targets for the week. So we are now done for the week, right? We had 2 high probability longs here, and now we want to wait for the weekly close again, right? So you can see we had Asia going down, and then London continuing the order flow, right, of Asia, and we have a sell-off. If you remember, those 2 lines here were the weekly inversion level, right, the weekly fair value gap, which we have flipped to bullish now, and we now don't want to see price trading below here again for the weekly close, right? We want to see this acting now as support here, and you can see this level is also aligning with those 2 down close candles, which are 1 bullish order block, right? So ideally we get a bullish reaction here for the weekly close, right? So there we go, we had a bounce right from this weekly inversion fair value gap, right? And ideally we also close above the daily here if we are still bullish, right? If we don't close above, we will probably get a bit of a deeper retracement and take out this trend line liquidity here next week, right? We have all of those lows here, so depending on how we close, we might take out some of this trend line liquidity here, right? So there we have the weekly close, and first of all on the daily you can see we have closed right above the mean threshold of this fair value gap here, and we've also taken out this short-term daily low here, and we now want to look for a bullish continuation ideally next week, right? Again, we are now trading in the middle of this range again, so I told you the middle of the range should be avoided, right? We either want to long at a discount or shorten the premium. Right now we are trading in the middle, right? So we have to be really cautious with taking trades here, and don't take low probability setups, right, until we get a new drawn liquidity confirmed by the order flow, right? So obviously we are still bullish, aiming for those highs here, but we now want to see again the lower time frames or the mid time frames, right, the H1 or the H4, to set up bullish again, to then continue the daily market maker buy model to the upside to those equal